Markets remain at record highs. So is it the right time to buy, sell or hold tight? Or is it time to get into mutual funds? Those are all the questions that we are giving you answers to. Hello and welcome to the new and improved Markets Today Talk Back. I'm Lata Venkatesh. With me, Surabhi Upadhyay.
Hi Lata. Well, just a quick reminder, you can tweet all your queries to us using the hashtag AskCNBCTV18 and we'll try to answer as many questions as we can over the next 30 minutes. Before we do that, let's take a look at all the top market headlines of the day. Markets cool off after extending gains in the first half of the day. The Nifty Bank underperforms and closes at its lowest point.
Two-wheeler stocks surge. Hero Motor Management guides for double-digit volume growth in FY18.
HCL Tech's fourth quarter numbers come in line with the expectations. Dollar revenue growth at 4.1% higher than peers. Margins at 20%. The company's guidance for FY18 constant currency growth is at 10.5% to 12.5%, with margin guidance coming in at 19.5% to 20.5%.
United Spirits soars as the CEO tells analysts the company is aspiring to achieve double-digit top-line growth in the medium term, but also working to improve operating margins to mid-high teens. Well, that's some of the headlines for you. It was a day when the market clearly behaved like the day after a hard party. It was hangover day. The markets were just trying to catch their breath. And in addition, of course, it had the expiry of the bank Nifty futures, and that required a little bit of profit taking in the private sector bank space in particular. And since the bank Nifty is largely composed of private banks, you saw some bit of sell-off in HDFC Bank, a little bit in Kotak Bank, probably because people smelt that the QIP is coming. For a whole host of reasons, the Nifty Bank was a bit under pressure, and that pulled the Nifty to close in flat terrain. You saw a bit of profit taking in the mid-caps as well. All indices ended in flat terrain. The Nifty Bank ended mildly in the red, but clearly we are still at stratospheric levels. So it's now over to Anuj to tell us a more detailed view of the day's action. Anuj.
Well, volatile day for the market. It came off the high point, not unexpected because it had a breakout yesterday and today also there was a gap up. So at high levels there was some selling. Private banks dragged the markets today. The two-wheeler stocks surged. Two-wheelers really was the sector of the day, led by Eicher Motors, which had a market cap of 80,000 crores, Hero MotoCorp and Bajaj Auto, other prominent gainers. Banks, there was a bit of a dichotomy. So PSU banks did well like SBI and Bank of Baroda, but private banks were down, led by Axis Bank. Nifty gainers today included Z Entertainment after its strong numbers, Hindalco and Adani Ports, while on the losing end you had stocks like ONGC, Hindustan Unilever and Bharti Airtel. In the F&O space, some gainers today included names like United Spirits, Godfrey Phillips and also Dalmia Bharat, while on the losing end you had stocks like Arvind, Siemens and GSFC. So all in all, slightly weaker day compared to yesterday, but bulls still retain control of this market.
Okay, Anuj, thanks so much for that. So that's the day gone by. Joining us to answer all of your questions and queries is Sharmila Joshi and Mitessh Thakkar. He'll give us a technical call on the market and all the stocks you have on your mind. And in case you have any mutual fund queries, then today on the show, we also have with us Sharad Singh. He is founder and CEO of Investor. So thanks to all three of you for being with us and taking in the questions. So let's quickly get started. In fact, the first question that we've got on the show today is a mutual fund query. This is coming in from Leon, and he has posted a question on Twitter. His query is on HDFC Small Cap Fund. He's taken a systematic transfer plan, an STP, of 1 lakh rupees per month, and he wants to know if this is the right thing to do or not. So, Sharad, I'm going to toss it to you.
The fund per se is, I would say, an average fund, so you can look at better funds, but there are more things to look at it. 1 lakh rupee STP, I believe, would be coming from a liquid fund to this fund, so you also have to look at the asset allocation if that is right, and then only one fund. Again, this is a small cap fund, so you might want to take a diversified bet kind of thing. If he still wants to,
get into a small cap fund, or are they already expensive?
I think that's a tough question. I mean, my friend called me yesterday and said, Sharad, can I invest now? I said, if you are anyways investing for, say, more than 3 years, then you will invest in equity. from the asset allocation perspective. If you're investing for less than that, you'll be investing in debt fund. So where the market is doesn't
within
matter.
that, what would you advise Lion K, maybe his name is put some of the money in small cap and some in something else?
Yeah, I would say so. Or he can also look at a fund like Kotak Emerging Fund, which is much better managed on a risk-adjusted basis, and it is a mid and small cap kind of a fund. So he gets a bit more diversity and at a lesser risk.
Right. Line K, if you are listening to us, you are advised to even put some money in Kotak Emerging Fund. Okay, there's Ravi Shankar K. He's tweeted to us. His query is on Maruti. He's holding about 100 shares since the company launched its IPO. Wow, that's some long-term investor. Trebled, quadrupled, I think exponential, 10 times made the money. He wants advice on whether to hold or sell the stock. Sharmila.
Well, honestly, I don't understand this kind of query because, as you said, it's somebody who has it from IPO time. And, you know, the kind of money that you made in, even if you had like an allotment of 100 shares is not something that you can really replicate at this point in time in almost anything. So I think that unless you have, you know, you're like really, you really require the money, or you feel that you don't have investments in anything else, and you wish to diversify, and that's the reason why you're doing it, then I think it's a different thing. But otherwise, I would just say stay put. I mean, you know, assuming you have another portfolio of other stocks, I think just stay put with Maruti, because I think even in the space that it's in, it's pretty much the leader, you know, whether you're talking of numbers or whether you're talking of margins. Yes, all these could sort of temper down in the coming years, but I think there's still time for that. So I think for the moment it would definitely be a hold in Maruti in any case, and for you I really don't see any reason to switch over to anything else.
Okay, it was a 125 rupees stock when it got listed, and I'm sure on the way there must have been some bonuses. I don't remember the Maruti stock history, but even assuming it was 125, you're sitting on 6,762. Why would you want to give it up?
What a dream this has been. Let's answer the next question. This is from Tewani Manoj. He wants to know if there is any mutual fund linked to gold. He's further asking if the NAV in a gold mutual fund will go up as international gold prices surge. So, Sharad, I guess he wants some idea about how to go about investing in gold, and if he's looking at the mutual fund route, will gold ETFs make sense for him?
Yeah, so interesting that in this time someone is talking about gold, especially seeing that it has lost the luster over the past few years. Having said that, yes, I mean there are gold mutual funds, there are gold ETFs, which are a good way to invest if someone wants to take exposure to gold. Typically, Indians have a lot of gold in their home by one way or the other. So we do not advise investors per se to take much exposure in gold ETFs also. Maximum it can be 5% or 10% depending on the profile. But if the person is looking forward to investing after taking all these decisions, yes, there are gold ETFs, gold funds, and their price would move in tandem with the prices of gold internationally.
You are clearly the most popular expert today, Sharad, because the next question is also coming from a caller, but I believe she has some mutual fund queries. Lakshmi Jaiswal is calling us from Bengaluru, has a call on her mutual fund investments. Lakshmi ji, go ahead.
Hi, thank you so much. I've been investing in HDFC Mid Cap Opportunities Fund and HDFC Equity Fund Regular Plan Growth, 3,000 a month from almost 20 months now.
Okay. You want to know whether you want to continue?
Yes, that's one question. And second thing is, will the performance of equity is not that great as comparison to mid-cap opportunity fund.
So,
yeah.
Okay, HDFC Equity Fund has not done as well as your mid-cap fund. Your question, your answer.
Yeah, so the mid-cap fund that you have is really a good fund and you can continue holding it. HDFC Equity Fund has gone through phases in the past few years. It has been doing well in the past 1 year, so you can continue to hold it. Fresh money you can look at putting in a few other large cap funds. There you can look at say something like a Birla Frontline Fund where you can put in some new money in the large cap fund. HDFC Equity has gone through the winds in the past few years. Yeah.
But is it time to perform HDFC Equity after holding public sector shares which didn't do? Now public sector is doing well, so is it like, should one continue with HDFC Equity?
I would say new money, avoid.
Okay, avoid new money, but don't take out the old money.
Yeah,
and new money could go to Birla Frontline Equity.
Birla Frontline Equity Fund. Okay. The old money, of course, you have to look at it, goes out of the exit and tax window, and then you can take a call on that.
Fair.
Okay, well, let's move to the next question. Lakshmi Jaiswal calling in from Bengaluru. Okay, the next one is Ninad Aranke, and he wants to know the difference between liquid and debt funds and the tax benefits that both of these funds offer. We get these questions all the time that, whether if you're going to be in debt, it's going to be more tax efficient than putting your money in an FD at the time of redemption. So if you could
This is the tax benefit between an equity and a debt fund, I think.
Okay, so first I have to answer the tax part of it. If you have money in FD, whenever you take it out, you pay the tax on the gain that you make. In fact, you pay it annually. As it gets accrued. In case of equity fund, the gains that you make in less than 1 year, for that you will pay taxes. Otherwise, you will not pay taxes. For debt funds, less than 3 years, you pay taxes as per your tax slab. So when you compare it to FD, for a holding period of greater than 3 years, you would not pay that kind of a tax, because post 3 years you have indexation, and the gains that you make post indexation will only be taxed. Coming to liquid versus debt. Liquid is a family of debt funds. So how long you want to invest? If you want to invest for a very short period, in that case you should invest in liquid fund, a higher period ultra short term, and then go in for the bond and those kind of funds. So that liquid is within the family of the debt funds.
All right. Thank you very much, Sharad Singh. These are doubts which one keeps getting, but good, we'll have you to answer them. We have to take a break, but before that, let's leave you with some opinion we got from Gautam Shah, the expert from JM Financial. He's a technical analyst, and he says the Nifty moving beyond the 9,000 mark is a measured and positive approach, and he has a target of 9,500 for the Nifty in the near term. Hear him out. We'll take a break and be back very quickly with our experts.
This move beyond 9,000 is a little more measured, which I think is really positive, because the market is telling you that it doesn't want to run ahead of itself. I think from a near-term perspective, we have been working with 9,500 as a target. We are almost within striking distance of that, and there are certain technical studies which suggest that around the 9,500 mark there could be a pit stop. So wouldn't be surprised if there is a smallish correction from around those levels. But barring that, I think once the Nifty gets past this particular level, I think that would really open up another 4 to 5% on the upside. There are people in the market who are fearing entering at levels of 90 to 9,300. And I am strongly of the view, looking at the charts, that there are no signs of topping out. There are no signs of a major reversal. We are not in bubble territory. I think clearly the best is yet to come, and the best is going to be far bigger than what we've seen in the last many years. I think there is no reason for acrophobia. I think this is a market which is likely to head significantly higher. Just that it's going to take its time.